The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman. My pleasure to be here Monday through Friday, and here at TFNN 927-6648. Don't forget, today being Friday, we have a 3-day weekend coming in on Tuesday. You got to watch this real closely. Let's go through the numbers. It's great shows as always. Starting 8 o'clock this morning with John Logan, then Larry Pesavento, then Tom O'Brien, Tommy, and Daryl Martin. And now I'm coming in, do my best. So let's just go through the numbers. First of all, let me do two things. One is it was interesting. I had a couple of emails and. Most were looking at the market kind of the way I've been discussing it, saying be careful to subscribers. Got to be very careful here. We've got a couple of short positions working beautifully, have one or two long positions. Funnily enough, the long position is still doing really nicely. One of them is just a purely speculative thing that has to do with an area that should find interest at some point soon. So it's just a speculative, tiny little price, couple of cents. So, and then I had one email saying, with your discussion with Tom at the interview yesterday, you sounded quite bullish. I have no idea why it would sound bullish, because what I was looking at is I said that I've got a price time match to the low of September the 29th, which was 15,942, and that time price match should come in by the 18th. Well, 18th is Monday, Martin Luther King Day, and we're closed. So isn't that? Let me just double check here. 18th is Monday, I'm pretty sure. So it'll have to be Tuesday. So it's either in one day before or one day after. If this one doesn't work, then it extends out further and it goes lower, and it goes to the August low of 15,370 back on August the 24th. What I did say emphatically was, if that we were to hold an attempt to try to get to, because yesterday was a very good close, if we were to attempt to get to the 16,000, now it's 483, it was a little bit higher before, I think it was 16,500 level, then all of a sudden you could look at something that says, and I couldn't imagine, and I said, going this far out, but I could see an arch formation before we do a retest, and I drew it in, an arch formation. So I don't think that's bullish, because we are absolutely not looking at putting on any longs at all at this particular point. However, there are a couple of things that I need to discuss, and I want to discuss it because this is Technical Friday, so this is the day that I feel that I can express thoughts as long as I can back them up with some facts, as long as I can back them up with the word if such and such happens. And of course, this is the market. How can you say we're going down to 15,370, the low of August, and just say it as emphatically as you can in 3 days? Yeah, my guess is that if we close ugly today, Tuesday could be a very serious down day. When I say very serious, I'm loath to even use the word, but it could be a crash scenario. Just looking at the charts, and crash scenario would mean more than 1,000 points, because we had 1,000 points. We've had 1,000 points days before that. August the 24th was at 1,000 point day. So that's not the issue. The issue is we could have an extreme sell-off. Will that be the start of a brand new move, like I did in October the 19th, 1987, where I said to clients the very next day on my hotline, I said, this is the low we were looking for in a time price match. I had the same sort of thing going on there, and that my suspicion is that within 18 months we'll be at all-time highs. This is the one time that I I absolutely do not feel comfortable until a bunch of homework of mine is completed. I've got almost all the prerequisites. Some of you might remember it was 8 years ago that I said, I'm an alumni, did a bachelor, finished a bachelor's and a master's program in music at the New England Conservatory of Music here in the Boston area. And I have done a great deal of studying of that conservatory. And one of the reasons is that back in 1929, they were flush with cash and they had millions in an endowment. Well, they took that million and they had about 4,500 students. And then they took those millions and they did something which in the perspective of history was an incredibly important thing. What they did is this famous Jordan Hall that was built in 1891 or something like that. Most magnificent hall. I've played in it dozens and dozens of times. That hall was added to what they call Brown Hall and why am I forgetting the name? Brown and Williams. And they added to it. And in 1952, you remember the Empire State Building? Papers were signed in 1929. And when it opened in the quickest time in 18 months, it opened, it was called the Empty State Building. It took until 1952 to come back again to make any money. Well, about in 1952 or so, the conservatory was essentially broke and was down to 1,000 something students. Now, I had said my greatest fear is that they are going to, and they had all these plans to build, that they would put the shovel in the ground when we make our all-time high. Well, last year, they put the shovel in the ground for a beautiful, beautiful whole set of buildings and stuff like that. My greatest fear, and I have to tell you that they were rated number 3 or 4, I was told some time ago in the big crash of 2007 and 8 in the stock, 9 in the stock market. They, in fact, held and did very, very well. They were rated number 3 or 4 of the top institutions in the country in preserving and actually growing their endowment. They never really had an endowment before. So I've been very impressed. But my greatest fear is that the timing was that I had said that when that goes, when they hit the shovel in the ground, and the building actually has already started going up, I've got to watch this really closely because we could be within 6 or 8 months or even a year of some kind of a major top. And the reason was not because of it went back to that history that that's what happened before, but it combined with a whole bunch of big projects throughout the world that are going on right now. Even here in Boston, 7, 8, 9 skyscrapers, some of them have already been started, but some of them on the drawing boards. Papers have been signed; they're all ready to go for 2017, 2018, even some in 2016 to be completed. So that's what I'm talking about. So to be able to say that wave 5 in Elliott, the breakout in the monthly chart is going to happen, I just don't know. Dow's down 400 at 390 at 15,990. S&P's down 45 at 1876. I'll go on with these things when we get back. Not a good day in the market, and we'll talk about this.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let me just finish my thought because I don't want to leave this just hanging. So as far as the New Conservative is concerned, it's in a growth period. It's had a lot of success over the last couple of years in being recognized. Well, it's always been recognized as one of the great institutions here in the United States, but now it's becoming worldwide, great number of students from all around the world. And you have to be looking towards the future. So in terms of the history, it's absolutely imperative that institutions grow like that. Excessivity, they don't have to overgrow, but they need to grow. The plans are environmentally beautiful. There's the whole thing. Building is from the drawing boards and everything I've seen for ages. It looks great. So that's really important. The timing is always something it's almost like a completely different sphere. So that's the way it is. They've already started. They're committed. They've got the money. Everything's fine. My contention has always been it's not the money. It's what happens in bad times. Can you afford to keep it? That's the only thing. That's the same in real estate. If you're buying now and you feel totally comfortable that you have set aside enough money that under any condition, you should be able to do okay. It might be hard, but you should be able to do okay. Why would anybody want to stop you from buying if this is something that you need to do? But if you are going out on a limb, this is a very difficult time. So it's just extending yourself. That's really the issue that I'm talking about. So two things going on. The icons that I've spoken about for 10 years, now 8 years, 5, 6 years, just talking about it over and over again. So many have come to my subscribers know I've just been sending out chart after chart of the new buildings that are all around the world that are on the drawing boards or being built. Mega things. A ship, 7,000 per person ship is 6,500 or 7,000, can't remember, on the drawing boards. These are the things that make me really nervous. Okay. Does that mean that we can't have another coda to the upside? Just the Fed says something other and out of the blue. Well, there's going to be a big coda. This is going to have to move. Even let's just take the low that we missed by 2 points a moment ago. Maybe we've already done. This low in the Dow, no, 15,942 is the time price match between today and Tuesday. That's what I'm looking for, right? Within that context, yes, of course we can go down, but I'm just saying that's kind of what I've had as the next step in the price time match. So we'll see what happens. Real real turnarounds don't usually happen on a Friday. We happened to get that Friday low on March the 6th, 2009 exactly, when we bought the Dow Diamonds. We started position there. What was it, 66.55 or something? I can't remember offhand. So this is different. So I don't think it's a Friday that you get. If you get a turn, I don't think it's the turn. So we're going to watch this very, very, very closely. Now let me go through the numbers. Where did the numbers go? Right there. So in terms of, disappeared again. All right, I'll do this myself. So the Dow is down 380 at 15,988. You can see this is a critical period. We've been underneath the 9-period moving average since we broke down on the 4th of January. Haven't even gone close to testing that 9-period moving average of 16,486. So that's going to be a key metric for next week. Let's just move on right now. The VIX index is it jumped to 30.95. Remember we've been discussing that, the different levels in the VIX index. I've got this as either a E/C in the 120-minute chart, and you've kind of recycled to the downside in the 120-minute chart of the Dow. But the trend went to 383. I mean, I have all my little tentacles and feelers out there saying, all right, are we going to have a reversal? And I promised my subscribers that at noon I'll do a real quick update to say what we're seeing so far, what we should do. I don't think we'll be doing very much at all. I don't know. Who knows in the next half hour? But most importantly, let's go on. We've got gold up $16.90 at 1090.60. Gold needs to break 1113.10, the high of the 8th. This is the continuous contract, the high of 8th of January, to show that not only has it gone to a leg D, but the weekly chart has broken the high of last week and is trying to tackle that very ugly candle of the week of the 6th of November, had a high of 1142 and a low of 1084. That's really important. My thinking here is that in the crash, if this is crash mode, gold should really be not up 16, but should be up $36 or more. So something isn't quite right. That means I have to go right away to the TLT, because TLT should be running strongly. Well, it's up $1.71, up 1.38% to 125.52, but it is leg D. But the stochastic and MACD are very strong. The MACD is strong in the daily. Stochastic's rising to 83%. The weekly chart has made a nice cup formation. So it's very important if today is the 15th. If by I'll give you the date, not the date, but the day. If by Wednesday of next week, the TLT has suddenly started to plummet under, it's at 125.56. It gives back 2.5 points, and you see it underneath 122. No, 3.5 points. 3.5 points, and it goes under first of all, under 123.50 breaks the 9-period moving average support. If it goes under that, then all of a sudden you can say, okay, now we can have a bit of a bounce in the market. My thinking right now is the way that the steadiness with which bonds have been rising and the rates have been falling is suggesting to me that there's a real good chance that the Fed is about the most nervous that they've been since Bernanke came in quite a few years ago and started saying, here's money, where's the helicopter, and I'll just keep flying around, everybody happy. So this is going to be just a really fascinating technical picture, not your portfolios, but if you're long. But it's going to be a fascinating picture, because is this the move that has started the major top? So the capitalism is going to succumb to, I don't know if I really don't even like the word socialism, but some form of socialism. I think there's one coda left to say, no, we're going to fight this, So let's go on. TLT up $1.67. The S&P, SPX.X. Look at this. This is going to be quite fascinating. There's a trend line that I drew quite some time ago. This trend line goes only from the October low of 2014 at 1820 to the August low of 2015 at 1867, and we just took that out right now. It says 1812 is the 200-period exponential moving average. So we've got to be careful. We haven't taken out 1867 is the low of August, and today's low so far is 1872. So the Dow has made it's 2 points above the level that we were looking at, which was, what did I say it was? October. It wasn't the August, it was the October low. So far, those levels have not been pierced. They are really close. Look at the QQQ series. QQQ is way down 3 at 100.85. It is not even close to breaking the October, week of the 2nd, 98.75 low. It's still at 100.87. So there'd be a lot more to go on the downside in the NASDAQ. So I was asked just now if I'd look at the my Dow quartet. I'll do that. I want to look at the IWM and then just a quick look at the dollar. So the IWM leg E to the downside, starting to find it's way below its left side low of August of October of 106.99. It's down at 98. And just as we go to the break, I'll wait. We'll come right back. Basil Chapman, Dow's having a little bit of a bounce. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So here we are. We're looking at the IWM, which is the Russell 2000, down 2.93 at 98.83. This is just a straight line move. These straight line moves very often have V-shaped recoveries or a large H pattern, and then they come back and retest. The most important thing is this is the second week underneath that arch formation in the weekly. It closed decisively below 106.99 last week. This is the last week that it has to get back to close above 106.99. That says that I've got to take the very long term. Now, when I say very long term, I'm talking about 2009. The IWM made a low of 34.26. Then it made a low of 60.99. back on the in October of 2011. Well, if you use that as a trend line support, that takes you to where we just broke from the August lows, and now, whoops, I said August lows, I meant September low of 106.99, and now we've gone, this is almost like an A to B equals C to D, that lightning bolt to the downside. It's in leg B to the downside. MACD is horrible, stochastic's horrible. This is a serious thing because it's the same as the New York Stock Exchange. You know, Larry had been talking about the New York Stock Exchange for a long time, and I had said we've got to look at it more as the old companies of the, not really, but I'm looking at it as the New York Stock Exchange Composite Index is the older of the indices, and the QQQ is probably the newer. That's what the way I'm forced to look at it because of price. And now the New York Stock Exchange has broken its long-term trend line support, and it's testing the left side, right side price time match I had of going to 88.14, the low of June of 2013, and that should occur by April. But the way I'm looking at bear markets, when you go into the full-fledged bear market, normally you're looking at left side, right side arch formations that take about the same time. But when you're looking at bear phases, real bear phases, like in 2011, that was a very quick move from 87.18 to 64.14. That was a 2,300-point move, and that, of course, in percentage terms is huge. And that was very quick. Took out the left side climb very quickly, and that's what we've just done. So this is the waterfall cascade you get to the monthly charts when you start to get this move. And that says to me, Mister, you're going to have to think this through very carefully. How on earth could we make new all-time highs? What's going to do it? And I will be doing that. It's just you remember I said, let's treat it one step at a time. The step right now is downside. Until we find that we make some kind of a base of support, you really don't want to get confused by looking at the upside. So one step at a time. And here's the, let's see, New York Stock Exchange, you can see there's that dash Chapman wave inside wedge trend line support. And that says if any time in January, the NYA closes, it's at 92.90, closes below 9100, we could get that acceleration down towards that testing the base. So this is a very important period because any rally of substance today, now we've made a little leg C in the 1 minute chart, big deal. It's the 10-minute chart that's a little bit, no, 10-minute chart is still stuck. So we're looking at then the 120-minute chart is just barely moving. So this is a very important phase because if the VIX starts to fall, we don't get a climactic reversal, but there is a very nice bounce. You're just using up upside energy. You're usurping that energy, wasting time. This is like the crash of 2009, or that was actually like the Lehman, like 2008. My thinking was that if they used the old-fashioned way of letting the banks fail, they would have failed for a moment. Now, this is, of course, theoretical. In real life, it's a horrible situation. And then you would have got multinational banks grabbing up these banks, and within a month, we would have done what the Fed had to pay all that money to do. That's my thinking. And now we would be still within the framework of trying to move to the upside, but way, way, way off the lows. I'm not sure which one would have been better, but all I'm saying is that history, you can't go back and reinvent it. You have to look at what you've got, and what we've got right now is a situation that just in a normal framework, let's just go through it. So GE was acting fantastically from the August low of 1937. It's screamed up to 31.49. Now it's holding quite well, but it has pulled back. This is going to be part of my benchmarking as well. So the weekly chart says it could be a pattern that makes like a heart formation, that if there is a big rally in the next week with GE, it's at 28.46, not breaking under 25 in the next few weeks, right? Under 25 to really eliminate any chance of an upside rally. We could get a heart-shaped formation with a slightly higher right side. And that would say, yes, the market could have a spectacular rally. If the Fed suddenly says, you know what, I think we made a mistake. We're not thinking of raising rates at all. And then the next step is they say, you know what, we might even bring them down. You know, at this particular point, I meant to do this for quite some time. I hope I can find it. I'm going to try to get it right now, because if I don't, There's a guy who just sends me these emails. It's been going on for about 2 years. Never, ever answered him. I'm always curious, and I get these things from everybody just sent, and I read them, and if it sticks, it sticks. Mostly it just goes right in one ear and out there. There it is. So this is a guy that has been talking about Ed Moncrief is his name. I don't know anything about him. And he used to forecast the Dow, and he had a record. And when he finally gave it up at the end of the year before, December the 31st, he said, "That's it, I'm done." 828 out of 998 is an 82.97% forecast accuracy. I think that's pretty damn good. So I thought, okay, I'll keep watching because I've done the same thing. I haven't tabulated anything, but people know that I have a pretty good record. So he talked about months and months ago. He said we're in for a real crash type scenario, and I'm looking, saying, okay, and he's been right. So I want to give him kudos for really good calls. And he talked about every rally will be very brief, and we'll just go lower and lower. And let's face it, that's a great accuracy rate. So now let's go back to our story. So GE is very important. Look, GE right now is only down 63 cents. It came back from the low, but that's not good enough. The day is young. This is trough A, this is trough D. So how it holds 2787, the 200 period exponential moving average in the daily chart, it's less than a point below. 2844 is where we're at. It's going to be really important over the next 2 days, because if it just crunches through that, I have to consider that GE is now it's already giving me a weekly sell signal. It hasn't gone to a sell mode yet, but it's real close to doing that. And the monthly is still very good. It's holding the 9-period moving average, and it's been a great forecast. It basically led the market on the way up. IBM, well, I put that in just because it's the old time. It's like the New York Exchange, so it's acting horribly. It's about to test, and this is my target for ages. IBM to the 200-period moving average in the monthly chart. We have no position. Pity about that. At 128.05, it's at 129.89, real close to that. Way below the 166 200-period moving average in the weekly chart. Triple M, which had a spectacular period of in 2014 March, it went to an all-time high of 170.50, plunged down to the 134 level, round number, spiked up to 160. That's really good considering 170 was its all-time high. Plop, it's come down. If it takes out that left side low of 134 round number, if it closes under that in the monthly chart in January, that's just not a good sign. UTX, my fourth one. This is G's my kind of lead indicator in the Dow. UTX is more my intermediate term. Testing right now the 85.50 low. The low today is 85.84. Whoa, that's the low of September. I'll be back and we'll continue with this analysis as soon as we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So now there's another phase to the selling. Now Dow's down 400 again, S&P's down 46. I have to tell you, I keep getting these emails. Is this the time to buy? Is this the time to buy? How about Goldman Sachs? How about the S&P? Let me tell you something. There are times now. I know that for most of us at TFNN, we love getting exact. That's what we try to do. We try to get the turns, or else we just have to play with the trend. And once you get the trend, that's fine. But it's a challenge. It's a technical challenge to be able to identify exact turns, because when you get them, you've got such a nice comfort zone. Like that time when we got the Dow in my opening call back in March of 2009. On March the 6th, then on March the 7th, March the 9th, when the S&P made its low, we were already in the position, and I kept saying, we're in the position, this is the widest stop that we're going to have. I had a 2.5-point stop or something, which is really big for us. And then I said, I expect that it's going to make it's going to make some kind of an arch formation. I called it an H, the lowercase h pattern, and then come back and test. It could test higher, it could test lower, but a test is probably what we're going to get. And it never did that. And there we were, stuck beautifully in this position. On the one end, emotionally saying, hey, it really should come back and test. And it never did test. Then the daily chart improved so much, it helped the weekly chart. Then the weekly chart helped so much, it helped the monthly chart. All of a sudden, the monthly chart started to look great. And there we are, we're in the position. Didn't matter whether I was calling up or down. We were in the position and we could take risks. That's why it's nice to actually get the exact top or the bottom. That's why for the IBB, I've refused to do anything else, just a couple of trades on the upside as a counter trend, but we haven't refused to change the short position, because my thinking is that the monthly chart, we don't know yet, suggests that it's going to go much lower, even if there is a big bounce. And there we were shorting just about 8 or 9 points off its all-time high of 400. That's kind of nice. And we've had a number of positions like that where we've kind of stuck with it. But the ones that I've chipped and changed, for instance, Orly, we've been in and out. But last one is still a great short from 257. It's at 233 right now. But I have to tell you, we were lucky to get the last short because we took a nice profit, and then trying to get back in was not easy at all. So that's the difficulty. That's the only reason why you want to be timing it. But when I get to Goldman Sachs, nice question, good question. Look, Goldman Sachs is... This is not a good chart. And if Goldman Sachs has started, ever since they got all the lawsuits and everything, it's just not the same company. When it made that top way back at 200, no, that was not. That was, 218.77. That was in June of last year. It's been real tough for them. And if they're having a tough time, you got to say to yourself, if Goldman Sachs is having a tough time, that's a big part of the XLF. It's psychologically and percentage-wise, it's a pretty big part. And the XLF has just taken out the 200-period moving average in the weekly. You've got to respect this. And what I am saying to those people who are emailing me about getting in is, at this particular time, you can see how quick 300 or 400 points up or down can be. So let's just wait and get the trend, because if the trend starts to move high, I know I'm still going to be trying to time it. Next week, I'm hoping to do some timing. We'll see. But I don't want to be, we'll treat it as just a short-term trade in the beginning. And if it holds, that's great. But believe me, the number of stocks, a question of the den about XLV, the one I've been talking about, saying that I think the S&P Select Healthcare Spider Fund is in serious trouble. And if it takes out, if it starts, it's at 66.74, down 1.5, down a point. If it starts to take out the low of the September of 63.73, it gets into this Chapman wave Roman candle. And the Roman candle says, watch out. Once you start trading for, there's a monthly chart, a good few days within a week underneath that low of 63.73, that Roman candle low of 56.63 beckons. So I'm just saying, be real careful, because this is the other thing. There are still, I know this for a fact firsthand, that there are advisors, financial advisors in major firms who are still saying you've got to have a buy and hold mentality. Even if we go down, you got to, and I'm saying, wait a minute, even if I'm thinking that there's going to be an all-time high, I want more cash. I don't mind getting in, because these prices are low. If things turn around, you might miss the bottom, but you're going to get the next trend on the upside if you're correct. I don't want to be catching a falling knife. We used to have someone in the den who used to say, I'm selling these metal gloves, because if you're going to catch these falling knives, you're going to get badly hurt. So there are these gloves for sale. And old Gigi, that was something that people used to chuckle about. But for those of us who have tried catching falling knives, it's a very dangerous. You need a lot of Band-Aids. So I'm saying, build up some cash. It's not a problem. And if you're wrong and the market goes up, you've got the rest of your portfolio, which can go up. But please have some kind of protection. Even here at Dow 16,000, I'm saying it's still not a bad idea, because you can reallocate your cash. And remember, get out of your junk. Keep the good stuff. Don't get out of the good stuff and sell the junk, because junk tends to go lower, and your good stuff tends to hold better. That's just the way it is. I learned that a long time ago. You want to build up some cash, and you say, okay, I'm going to sell. Oh, things are down now. See, you got to be careful. So now, in a crash scenario, it's something completely different. I have no idea if we're going to have a crash scenario. But if there's a crash scenario, back in October the 19th, 1987, I had already sold a chunk of my positions, and I only kept just a handful, just like, I can't remember, maybe 3-4 positions that were still doing very well on the Friday of the day before, the trading day before the crash. But when the crash came, those things got cut in half. So I'm just saying, it's not a bad idea, when we have such a volatile market, so much uncertainty, to have some cash ready. All right, I got that out the way. Now, CLX, Frank wants to know about CLX. So CLX is trading right now. Oh, Clorox, of course. Clorox is making a leg E in the monthly chart. It's making a leg F. Alternate count could be maybe a new A. I'm calling it F for now. In the weekly chart, it is holding extremely well. It's down 0.17% at 126.43, down 89 cents. It does have that pattern now. I'm talking about technical analysis, that pattern that I call the H pattern. And it becomes the dreaded H when the left side fails. So if you go to my chapter in my book, based on the Chapman wave methodology, the dreaded H comes up as chapter 17, slide 332. And it's a very easily articulated concept. It looks like this right here. In fact, it looks like, where is it? There, look, there's the H pattern. It did take out the left side low, but it closed above the low, 121.88, and it closed at oops, no, it didn't. It went to 120.74 on the close, right here in Clorox, back on the 13th of November. But look what happened. The stochastic then turned around and had a fabulous rally. The MACD had a fabulous rally, and then it became the H pattern, and it became the Chapman wave cup and ladle breakout pattern, which says you can go to a D and then test the lip. So yeah, we've got another H pattern. So I'll explain what's important about it. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. I was also asked about Exxon. It's in the kind of the same defensive category right now. It's unusual, but that's the way it is. Exxon is at 77.30 down $1.82. If it must hold 72 support all next week. It's already got to try for the 81.08 level, the 200-period moving average. Get above that to help the weekly chart a lot. So far, it's really holding well, but that goes into the case where the stocks that were beaten down the most some of them seem to be holding up a little bit better. Let's go to Clorox now. Defensive group, not defense like in Raytheon, but defensive. Holding quite nicely. It's down 98, down 7.77% at 126.34. This is what I'm looking at. It went to an A, then it went to a B, and this B is almost going to be like a B minus. I'm a little concerned because it's telling me that if the weekly is at an F, if Clorox, and I probably would say to you, if you're holding it, I wouldn't just jump out now. I'd say, you know what, at this particular point, it should be a more kind of an attempt to buy and hold because, yep, so who in this area is going to stop doing, cleaning stuff. They're not. So that's why it's the defensive area. But if it takes out 123.88, let's go to 123. So it's just 3.5 points below. Then you've got to say, oh, now it's impacting the weekly chart, and that'll impact the monthly chart. So one step at a time. So far, it's holding pretty well considering. I'm talking about just the whole pattern, not the day, the whole pattern. I can put in two alternate counts. One is, this is the cup formation, and that cup formation has a fighting pattern, which is the H pattern. The H pattern is the one that would break down. So just be a little careful. If in Clorox, would I buy it right now? I wouldn't be buying anything long. Rather keep capital. Why take a risk? But if you're in it, then I'm saying you're in for a different reason. You're in trying to hold it a little bit longer term. That's the reason why I say if it comes down and successfully retests 123.79, then bounces up, and then the general market starts to rally after that, Clorox should be one that bounces right back and goes right back to the high of the other day of 129.38. That's the way I'd look at it, because if it stays below 123, then it's a problem. Then it has a real problem. Okay, so in the last remaining few minutes, and I'm going to be this weekend, I'm going to the New England Auto Show. It's on right now, started yesterday, going through until Monday, I think. Go every single year for I don't know how many decades. And it's the other part of the ingredient that I'm looking at, and I'll discuss it next week. Got nothing to do whether I'm going there to buy or to sell or to whatever. I'm going there to study, like I always do, to look at the automobiles, see historically what I always look at. Engine size, where are they starting to put the excessivity? Are you getting grills now that are so big that to repair them cost thousands and thousands when it should not cost anything like that because it's so fancy? All of that stuff, that redundancy. When you get into an era of redundancy, you have to be careful because money is blown on emotional stuff. So now just let me do this. In the E-mini, 1861 is the support. It's got to hold that. This is the daily chart. Near term, 1864 to 1858, really important, and we're at 1866 right now. So that's the 10-minute chart. The 120-minute chart says 1857. So this is very interesting. The 120 are a little bit lower than the daily. Let's just have a quick look now. Oh, the VIX, I never even touched on that. Yeah, I did earlier on. So I want everybody to have a good weekend regardless. Life is more than just the stock market. So look at this. This is peak, a leg D in the daily VIX index. It's at 2792. If by the end of the day there's a very strong rally and the VIX starts to drop under 27, it says it's stalling any real lower, any tradable low. I think that's the way I'd look at it. But if we close at the low of the day, that VIX could very well go to the 32 level. When you get into the 30s, you can see historically, we are really close to some kind of a market turn. Where does it come? We'll be back on Tuesday. Have a wonderful weekend. Check out my opening call. I think you'll find a lot of information, especially this weekend. Thanks for being here. Stay tuned for your swimming lessons and all the other great shows.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.